State mindset. Today's video is going to be absolutely alive. So I'm bringing you guys a live video today. I wanted to do something different. I hope you guys like it. I am insanely nervous right now. I already called Jeff. You guys saw that in the comments. My man Jeff M couldn't support me, but it is what it is, guys. Let me know that my audio is okay. Normally I'm able to edit my audio before posting. But I wanted to do a video today about the new IRS rule for $600 in transfers being reported. I wanted to do a video on that because, as a loan officer, I understand how to look at, certain things like an underwriter. And the problem with this IRS thing, you guys, obviously it's a tremendous overreach into our privacy, into our finances. But another huge problem with it is it's almost impossible to track. There are so many different ways that we pay people that is not, taxable income. So, I was freaked out going into 2023 and, how that would affect my tax reporting because I file my own taxes. So the good news is, guys, the IRS decided to delay the new IRS $600 reporting rule. So you will not be getting 1099Ks this year for any deposits that you made in excess or a cumulative total of $600. So what I'm going to do today, guys, is I'm going to go over an article. I'm going to read an article for you guys. I'm going to talk about, what the problems with the law is, what are some solutions that we can do as consumers to try to get ahead of it. And then after that, guys, I'm going to take your questions. I definitely want to do, answer some of your questions. Your questions can be really about anything, but do me a favor, guys, because I am so overwhelmed and nervous right now. Don't ask me questions until I open it up to questions, because I can't look over this way to see what your questions are because I'm trying to keep my eye contact with you. So other than that, guys, just let me know that my audio is doing well. I appreciate you guys. I'm starting to see some comments here. So I definitely appreciate you guys. I also linked in the live chat. If you guys scroll to the top of the live chat, the link to the IRS where they're announcing the delay is in the live chat. I'm also going to go back after this video is done and put the link in my description and in the comments as well, so that you guys can see it yourself. Now, other than that, you guys, I really appreciate you. Happy holidays, Merry Christmas. I'm going to be working on, for this evening, the Redfin weekly report will be published this evening. And then my housing market update will be published tomorrow. So I'll be working on all that type of stuff, guys. And then really, really excited. I'm going to do a year-end video as well that basically compares where we were at from the beginning of the year till the end of the year, as far as prices, inventory, unaffordability, everything, as far as what my guesses were and what we can expect in 2023. So my next set of videos, you guys, should be super exciting. I know I'm rambling, you guys. I really apologize. It's a bit dark on your set. Yeah, I like I like my dark, set. I like this set. My man right here, just saying. I'm just saying too, man. I like it like this. You come over to my house, man. Help me with my production in the background. I'm always trying to play with it. You guys see Darth Vader in the background. It is what it is, guys. So let me pull up this article right now. I have, some things I want to show you guys. So here's the article right here, guys. It's more of an announcement. Again, this is from the IRS directly. I'm going to read a little bit of this, and I'm only going to read a little bit of this, you guys, because obviously I suck at reading, and I'm pretty sure you guys don't want me to read. So it is what it is. But the IRS announces the delay for implementation of the $600 reporting threshold for third-party payment platforms. So we thank God, you guys, thank God we will not be getting 1099Ks at the end of this year if you guys use platforms like PayPal and things of that nature. So that is, how do I remove this comment? Okay, there, I just removed it. So that is really, really good, guys. I was freaking out. Obviously, as a loan officer, it's really, as a loan officer, when it comes to lending, we have to track everyone's money. So I know how hard that can be. You guys may not know how difficult this would be, but it would have been, it's going to be a complete nightmare, you guys, because I transfer money to PayPal to pay other people, right? And, transfer from my checking account into PayPal to pay someone can be 1099, right? Which is not good. So it's going to be a mess. I'm glad they're delaying it. Let's read a little bit of this. The Internal Revenue Service announced a delay in reporting threshold for third-party settlement organizations set to take effect in the upcoming tax filing season. They obviously came out with this, you guys, on Friday, right before Christmas. I don't know if anyone picked this up yet, but this is absolutely great news. As a result of this delay, third-party settlement organizations will not be required to report tax year 2022 transactions on Form 1099-K to the IRS or the payee for the lower $600 threshold amount enacted as part, and here's where it came from. This is horrible. Such an overreach, guys. Like, it's this, in my opinion, this is worse, maybe not worse, but it's just as bad as the Patriot Act disclosure. Unbelievable overreach, in my opinion, but it was done through the American Rescue Plan of 2021. Now, as part of this, the IRS released guidance today outlining the calendar year of 2022 will be a transition period for implementation of the lower threshold reported to third-party settlement organizations, or TPSOs, that would have generated Form 1099-Ks for taxpayers. Again, I don't know how many of you guys were worried about this, but I was really worried about this, guys, because I file my own taxes. The reason I file my own taxes is I don't trust a CPA to do my taxes for $150, $200, and I'm really, really good at numbers. So all of this stuff that I suck at as far as grammar and pronunciation, thank goodness I make it up in math, right? I'm really, really good in math. For example, 10,539 times 832 is $152,398, right? I'm just kidding, guys. I'm not that good. But, I really apologize for that dad humor. But let me finish reading this, guys. The American Rescue Plan of 2021 changed the reporting threshold for TPSOs. The new threshold for business transactions is $600 per year. So again, a cumulative total of $600, you guys. That is absolutely outrageous. Now, that was changed from the previous threshold of more than 200 transactions per year, exceeding an aggregate amount of $20,000. So before this new rule change, guys, a 1099-K was only issued if you had an excess of 200 transactions and a cumulative total of deposits of $20,000. So the fact that we, removed the 200 transaction requirement and go from $20,000 to $600, you guys, that's an overreach. That is a massive overreach. And here's the thing, let me be very, clear here. I am not trying to hide anything from the IRS. Okay. So I'm not trying to hide anything from the IRS. I'm completely honest. I do my own taxes. I file everything perfectly. I file my taxes as if I'm going to be audited. Right. So, the problem with this, though, is not that, I would intentionally make a mistake. The problem with this is everyone's going to make a mistake, right? I think there's going to be a lot of innocent people and, people that are doing their taxes properly that essentially get rolled up in this new IRS rule. So I'm hoping they keep pushing it out, because the thing is in order for me to prove that the deposits are not taxable, I would have to break down every single deposit that I have going into, Venmo, Cash App, PayPal. I would have to track and break down every single one of those deposits. How do you do that, right? The way you do that is overwhelming note taking. So, and I know that, guys, again, I'm a loan officer. I understand underwriters. I understand how hard it is to track money once it's being transferred, and I do my own taxes. So, really, really bad deal, you guys. So let's go back into this article right now. Okay. The transition period described on the notice is here, I won't bring that up, delays the reporting of transaction in excess of $600 to transactions that occur after calendar year of 2022. So, in other words, you guys, what this is saying is they've pushed it out for 1 year. So that means is everything that happens this year, we have to understand that, going into next year, going into 2024, so January of 2024, is, according to this, is when we will have you be receiving our 1099-Ks and be required to report those properly on our tax returns. So that has been extended, you guys, to 1 year. But, they also noted that, you're still going to get a 1099-K if you had over 200 transactions and a cumulative total of $20,000 in deposits. So even though they're delaying this, y'all, that doesn't mean that, here we go. Okay, sorry about that. So even though they're delaying the $600, the existing rule still applies. All right, so I'm going to take questions here in a second, you guys, but, let's, again, recap a couple takeaways. Obviously, it's delayed. The 1099-Ks are delayed to 2024. Payment platforms such as PayPal, Venmo, Cash App will start reporting you 1099-Ks next year. The previous rule was $200,000 in cumulative, deposits. with an excess of 200 transactions total. So, in other words, you guys, the problem is, is the organization. So following the money around is the problem, you guys. The overreach from the government is the problem. Essentially, what this means to me, this rule overall, means to me that the IRS can mess with whoever they want, right? Now, that they can already mess with whoever they want, but the fact that they can come after people for $600 in deposits, shocking. Shocking. So you make the government mad, you make the IRS mad. I mean, and I'm not trying to make them mad. Please don't come after me. I'm just saying, you guys, this is a huge overreach is the way I see it. Now, a couple solutions that, I was thinking about as far as, because again, I'm always trying to think of solutions because I'm going through this myself. I have maybe 4 Schedule Cs I filed for various businesses. So here's what I'm doing. All of my businesses have a business checking account and a business PayPal associated with that business. So what I'm going to do is try to receive only incoming deposits into my checking account so that my business checking account, so that they don't come after me. So again, I'm separating each one of my businesses so that it's easy for me to track. Now, if I have to send receive anything through PayPal, it's going to be a lot easier for me to track a cumulative total of $600 in deposits if I'm only using one platform. So that is the other solution, guys, is I'm just going to use PayPal. I'm not going to use anything else because, quite frankly, it's going to get out of control. And if someone can't receive PayPal, it is what it is, guys, but I'm just not willing to put, my whole operation at stake by falling victim to this $600 rule that is going to take effect in this coming year, but it's not going to be due until 2024. So I really want you guys to pay attention to that. That again, is going to affect you with, yard sales, or let me give you an example as well. Something that concerns me. Say I have a friend and, I borrowed money or he did something for me and he needs to be paid through PayPal. My concern is this: if I transfer, say, $800 from my checking account into my PayPal account to pay my friend back, I can get taxed on that $800. The money is mine. I'm transferring it from my checking to PayPal. Then from PayPal, I'm going to make a payment. But the deposit, that $800 deposit, can be taxed. So keep it simple is my point. Now, other than that, guys, let me take some questions. I'll open up the questions now. I'm going to kind of look here, at what's going on. But if you guys have questions, throw them up here and I would, I'll get to them. But let me know what you guys think. Let me know what solutions that I didn't cover. If you guys can comment, maybe you guys are CPAs. I'm not a CPA. I do my own taxes. I use TurboTax because TurboTax allows me to stay in a box. If I go out of that box, it warns me, Travis, go back into the box, right? So, let me know if you guys can think of any additional problems with this law that I didn't think of. And let me know also, you guys, if there's any additional solutions, that you can think of as well. I don't want to, really get too, political or really out of the norm, or the subject of this video. But again, you guys, let me know what is going on in your head. Let me throw up a comment right here from my man, Dooster. Dooster, love you, brother. Let me see. Cash is king. Buy some. Oh, my God. Dooster, I just threw your comment up. I didn't even look at your comment. What are you talking about, bro? Children may be watching. He's talking about Scarface, okay? Tony Soprano, Miami Vice, all right? White suits and everything. He's talking about talcum powder, okay? And I don't even know. Dooster, dang it, bro. Anyways, you guys, seriously, man, if you guys have any questions, let me know. I may wrap it up if you guys don't have any. My man right here, let me throw this up real quick. Okay, so, I get a lot of comments like this, guys, trying to buy a home. Now, obviously, I try to stick to real estate, but part of what's important about real estate, this guy said, got him. I'm going to get you back, Dooster. Don't let me. All right, I'm going to calm down, but I'll get Dooster back. I know how to do memes. I have memes in my external hard drive ready to roast these YouTube realtors. But my man, Orlando, I'm just going to rant a little bit. My man, Orlando Miner's like, Travis, don't do it. Leave these guys alone. Worry about your subscribers. And I'm going to stick there, guys, but it's just driving me crazy. It's driving me crazy because clearly a lot of these people have false narratives that they're telling you they stay cheerleading to buy real estate. And most all of them have a lead platform. If you go to these people's YouTube channel and you put about or community and you click their websites, 9 times out of 10, their websites are a landing page to capture leads. Now, I'm not knocking them, right? Make your money. But my problem with realtors right now, you guys, is the lack of pivot. right? And that's why I love, Steve Daria. I love Michael Bordenero, because they were realtors that pivoted, right? So they were starting, on YouTube with doing videos, top 10s, places to live, cheapest places to live, good realtor videos, right? But, and they pivoted. It's important, y'all, as a professional, if there's any professionals watching me right now, and this is a little bit off subject, if there's any professionals watching me right now, I'm not trying to kick you guys down. What I'm trying to say is, what is wrong with you? And okay, so maybe I'm trying to kick you down a little bit, but what is wrong with you guys? Warn your people, be cautious about the potential of what's happening, because and this is to the professionals, to the realtors, to anyone, consumers right now want to trust someone. They're desperate to trust someone, and they can't trust people that are, just misleading people, right? They have an intention. I'm really sorry, guys. I hate going off like this. I want to go back to where's these questions at? All right, here's a question right here. Okay. All right. So I'm not reading these. I'm just saying a question mark and I'm throwing it up here. Obviously, that's why Deuster got me, and it won't happen again. I'm going to watch my man. You got me once, Deuster. You won't get me twice. But now here's a question from Eddie. What do I mean when I say well qualified? Here's what I mean when I say well qualified. What you guys have to understand first is my past as a loan officer, okay? As a loan officer, I would try to help everyone. And if someone didn't qualify, I would put them in something, I call it an action plan. I'm really good at credit. So what I have essentially learned as a loan officer is an overwhelming amount of buyers are not well qualified. An overwhelming amount of buyers are barely this much. They're barely qualified. That's why when the Federal Reserve lifts the interest rates from 3 to 6%, 15 million people are priced out. I'm not priced out because I'm well qualified. So what I mean by well qualified is not pushing your purchasing power to the max, not having any consumer debt, and having, say, 6 months of savings left over after you close on the home. You don't want to go broke buying the home. And also what I mean by, a well-qualified buyer is my mindset. If I do decide to purchase in Q1 of 2023, you guys, my mindset is right. I will purchase in Q1 of 2023 expecting home values to continue to go down, right? That's what I mean by well qualified. And talking about that real quick, as far as my own purchasing, you guys, if I purchase in Q1 of 2023, I don't think people should follow me because I am so well qualified, right? And in fact, let me make this point, overall, not like Jeff, okay? But overall, if you're a first-time home buyer, again, not like Jeff M is well qualified. But overall, if you're a first-time home buyer, you guys are probably going to want to sit out 2023. You guys are going to probably want to wait for a pivot. Now, what you can do right now is strengthen your purchasing power. So then when the buying opportunity comes, you guys are good. I'm ranting, you guys. This is about taxes. I'm so sorry. All right, throw up another question. Anyone else? When is Florida going to sell me a house at a great price? If I were to guess, I'm going to say September of 2023. Next question, right? Crystal ball. Just kidding, you guys. Let me see if there's anything else. Here we go. Do you know any websites to look for foreclosed properties? I do. I just can't remember them right now. Let's see one more here. What percentage should we? y'all gonna get me in trouble. I get so much. I get a bit of hate from my peers. What percentage should we be paying an agent? You guys, please don't get me in trouble, but that depends on the agent, right? I'm going to say 90% of the agents deserve 0% for selling your house because MLS sells your house for you. So you could argue that, let me see if my focus is messed up. You guys can argue that the MLS, the multiple listing service is actually what is selling your house, not necessarily the realtor. However, let me say this. Generally, what I see, again, this is just my opinions, I see 3% going to seller, 3% going to buyer, plus 2% in fees. So understand that selling your house generally can be up to 8%, right? So you take an 8% hit for selling your house. Remember that. So if you're upside down, $20,000, add 8% to that, as a cost to sell your house. So good question, you guys. This is very important here. I'm going to be making a video about this debt to income ratio, y'all. Debt to income ratio is vital. And that's why I tell people to, get out of consumer debt, because The more consumer debt you have, all of those monthly payments goes against your debt to income ratio. The more consumer debt payments you have, the less loan amount you guys are going to qualify for. You guys do me a favor. I want to ask you guys a question and comment. And I'm trying to figure out how to do this because I'm really sick and tired of only talking about housing market crash stuff. Obviously I try to put a lot of value in my videos, y'all, but I really want to start giving you guys a lot more value. I don't know how I should do that. Members only. I don't know, but two of my next videos, you guys, is I'm going to pull up a credit scenario. It's called a what if scenario, so that I can show you guys with the algorithm and with the program how credit actually works. So if I pay down a credit card, here's my score increase. If I'm late, here's how it affects my FICO score. So let me know if you guys want to see that. I made a class through Trek. It's actually approved through the state. I call it, how does credit really work? Let me know if you want that, you guys. And let me know also, I have my loan application installed on my studio desktop now. I'll pull up a loan application if you guys want me to, because I really want to show you guys the importance of debt to income ratio and how that actually, majorly affects you. Okay. So let me know if you guys want that. Let me throw up some more questions here. Travis, can you do a video about foreclosure listings, county liens, sheriff sales? I mean, yeah, I'm actually going to work on a video after my 2 update videos, y'all, on the new foreclosure information. The foreclosure information is out. And I'll probably have Steve Daria come on, if he's willing to come on. I love Steve. Steve's really good at foreclosures, you guys. I don't focus on foreclosures. I live in Houston, Texas. Usually in Houston, Texas, it's just not worth buying a foreclosure when our resale is generally so low. So I will get to that. Let me see here. Is IRS delaying 2023 deposits till 2024? Yes, that's correct. Essentially, they're canceling out 2022. Okay, so they're canceling out 2022. Let's see what my man Deuster. I didn't read it. He could have got Deuster. You could have got me. I forgot. I was supposed to read it. In my opinion, if 3% versus 6% priced you out, then you didn't. You see? See, Deuster, this is why I throw Deuster up here. Deuster's a smart man. He is absolutely right. If you guys can't qualify, if you can only qualify at 3% and you're priced out at 6%, generally that means you're not well qualified, right? Now, let me explain, a little bit about the situation we're in. Part of the reason why we had such overwhelming equity growth is not only because of the Federal Reserve lifting the floodgates of demand, super low interest rates, right? And, free down payments in the form of stimulus. But not only that, you guys, the investor shares. Unlike 2008, we had so many investor shares in certain markets. Investors picked up 50% of the listings, jacking up the prices even more. Not to mention this, bidding wars. Something we didn't have last time, you guys, was bidding wars. These bidding wars got so crazy that there were loans that existed that allowed people to make all cash offers, right? So in these bidding wars, people say, I can close in 7 days, all cash, but really it was a loan. It was all cash from the lender. Shocking stuff, but that all jacked everything up. I mean, we got a lot more room to go down, you guys. We got a lot more room to go down. Let me see if there's any more questions here. Bank or credit union, that's something you got to figure out for yourself. Different banks have different loan guidelines, right? And also they have different rules on rules, which is called overlays. So in other words, what I'm saying, just saying again, that's funny. Good name. But what I'm saying is shop your freaking mortgage for the love of God. Okay. And shop your realtor for the love of God. Please. This is a very important transaction. Y'all need to shop. And when you find someone that is at least honest, hold on to them, right? Hold on. So let me see if there's any more questions here. Let me see here. How does being a business owner play into a debt to income ratio? Let me explain this real quick. This is a really good one. And that's kind of why this video exists, you guys. I'm a business owner. So here's how this is very important. Listen to me, especially if you're a business owner. Here's how underwriters and lenders qualify business owners is generally, well, it depends how you file your taxes. So if it's a corporation, 1120 is 1120S. But if you're self-employed, you file a Schedule C generally. And the way the underwriters or loan officers use your self-employment income to qualify you is they take the last 2 years of your tax returns. So they take 2 years of your tax returns and essentially add the net income together, divide by 2, right? And then you have 1 year, you divide that by 12, then you have your monthly qualifying income. So listen to me again, real quick. they use your net income. Okay. So all of the deductions, it's essentially taking away from your qualifying income, except there's three things. There's three things: mileage on your car, depreciation, and home office expense. So if you guys go heavy on home office expense, if you guys go heavy on depreciation, if you guys go heavy on mileage on either an 1120S or 1120 or Schedule C, you're actually able to add that back into qualifying income. So what's really important in the next 2 weeks? Guess what? We got to file another tax return. So file your tax return wisely, get with a loan officer and lender, and make sure you qualify for the house that you want, or at least the price point. I'm not saying buy, right? I'm preparing right now. I'm not running out there to buy. I'm preparing. Great question. All right, let me see. You know, Oscar, he's wondering if I'm worried about a wage price spiral. Brother, I'm trying to put myself in a situation, Oscar, to where bad news is good. So I don't want people to get hurt. To be honest with you, I'm a little bit worried about that when I think of other people, because here's the sad truth. And you guys, please pay attention to what I'm saying here. In order for us to win, to become such great winners, so many people have to lose. So do we really want to brag about that too much? I don't, right? Because I've lost everything once. So I know how that feels. It is what it is. So, I'm a little bit worried. Let me see this. Okay, this is a good one, I think. Should I fold my car loan into my mortgage payment, and how will that affect my score? So I think what they're asking, this just saying is, just saying, appreciate you stepping up with these questions. So this is how I'm reading this question, you guys. When he says fold in, should I fold in my car loan into my mortgage? To me, that means refinancing. And overall, I'm going to say, hell no, you don't want to refinance your consumer debt into your mortgage, because your mortgage is over 30 years. So it's going to take you 30 years to pay that car off. What you should do is pay the car off, right? You need to pay the consumer debt as soon as possible. Now, having said that, I need to do an analysis, but in some situations, it makes sense to do a debt consolidation through refinancing, right? Right now, I don't think that's a great idea. It will more than likely lower your DTI though, to answer your question. Is it a debt consolidation loan? I'm going to be honest, you guys. So I got to be very careful, because I don't believe people should rob Peter to pay Paul, right? We should be getting out of debt. But as someone that struggled with bankruptcy, overwhelming debt, these are some good questions because they're real. And I'm going to be honest, guys, there are some debt consolidation loans that are great, especially if you're drowning in credit card debt. Credit card debt, y'all, is some of the worst legal debt you can get in. I mean, it's horrible, horrible debt. So if you can get out of your credit card debt by restructuring the type of loan you have, I say go ahead and do it, because those minimum payments on credit cards that's some bonkers right there. Let me see here. This is a good question. What app to use to track spending and savings? I use mint.com, and I'm not affiliated. I talk about them all the time. I get paid zero money, but this is who I'm using myself. So I use an app called Mint, mint.com, and I've linked all of my checking accounts and credit card accounts to there. So I get to monitor every single penny my household spends. Doesn't matter what account it's used from. So mint.com, great way to track your finances and to budget. All right. So great questions, you guys. Great questions. Can you please get my score? Yes, please. I can get my score over 750. Pay all my cards bi-weekly. Help. No late payments ever. Okay, I don't think that's a question. But yeah, so let me talk a little bit about what credit cards you should pay down first, your low ones. As far as FICO score increase, you guys understand this. Each credit card is a trade line. Each trade line is individual on your credit reports. So say you have 8 credit cards and you're overwhelmed in those credit card debts, and you want to pay those credit cards down to increase your FICO score. You're going to want to start with the lowest one and work your way up. Now, remember also, this is very, very important. Credit cards is the only debt that has utilization ratio. Okay, so car loans, school loans, mortgages do not have utilization ratio. Utilization ratio is like a cheat code to getting great credit. Now, what that means is how much money you charged on your credit card versus how much your credit line is. Now, there's tiers of FICO score improvement for utilization ratio. You never want to go over 30% of your credit line. Okay, never ever go over 30% of your credit line. And I say, just don't use your credit cards. Just don't use your credit cards. But if you want to build your credit back up, start with the little ones, work your way up, and get everything well under 30% of your credit line, okay? Okay, good. So we want some people to do loan apps. This is good. We're going to talk about this real quick. Can you talk a little bit more? What should look for on comps and market value. So very, very important that the specificity, you guys, of what I'm saying. Being a teacher for 4 years and being in real estate, I have learned people are going to take what I'm saying wrong, even though I'm really desperately trying to be super specific. But let me explain comps and market value. Y'all need to understand that appraisers use a different method of value calculation, okay, than realtors, right? A good way, as far as a baseline to determine if a house is at a good price point, is just the baseline is obviously comps. And when you look at comps, which is sold property, you want to find comps that are in the same subdivision. Okay. Same subdivision, sold within 6 months, as close to the characteristics as the subject property as possible. Okay. That's a good way to do that. Kind of what the appraisal does. If you want to look at a bunch of data, I just use a very simple method so I know that I'm not wasting my time, which is price per square foot. I am a realtor, but you guys can contact a realtor and have them doing a market analysis on the area that you want to buy. And again, you want to go hyper local. The more serious you get, hyper local subdivision, right? But you're going to want to get a market analysis, and you can go from price per square foot, median price per square foot for 2019, 2020, 2020, 21 in the market that you're interested in purchasing. And that's going to give you guys like a really quick way to determine if there is wedge or value in the deal, because we got to be careful not to fall in love with the price cuts, right? Everyone wants the price cuts, $200,000, $300,000 price cut. It doesn't matter what the price cut is if the home is not under market value, right? So it is a little bit of a gimmick. Let me see what else we got here, y'all. Let me kind of scroll down. I'm going to kind of go fast here, you guys, because I don't want this to be too long. Y'all, I can't wait to do some more stuff on builders. I have learned so much in the last few months about builders, you guys. Let me just tell you this. They're hiding their inventory. Builders are hiding. You guys, there is so much more inventory than what's on MLS. It's shocking. I found certain communities where the inventory is actually like 10 times more than what's on MLS. 10 times more than what's on MLS. You guys, the amount of new construction building right now is out. I wish I had my chart up. I had a chart up before I started the video. I wanted to show you that. But anyways, can you do a video on what builders are doing to save money, cut corners? Just curious. So another video I'm going to do, Dooster, is I'm going to bring an inspector out to a site and I'm going to have them walk it. Because, especially Lennar, they're throwing these houses together at like light speed. So it is what it is. Here's a good question, you guys, and I really apologize. It's a little bit off subject, but I think these are great questions. Do you think an ARM loan is a good idea at this time? Good question. I want you guys to ask me all your questions, but I'm just going to say it like this. No, I think if people are looking at ARMs right now, then here's the thing. There's always going to be some situations to where some things make sense. Okay. But when I'm talking about vast majority. I absolutely do not think that you should be getting ARMs right now. If you can't qualify in a fixed rate, don't buy a house. If you're uncomfortable with your payment on a fixed rate, don't buy your house, right? We're in America. We have fixed rates. We passed the Dodd-Frank Wall Street Reform Act. We have qualified mortgages. This isn't Europe, right? We don't have to be at the mercy of adjustable rate mortgages. No, I do not think ARMs, adjustable rate mortgages, are good. And I do not think 99.9% of people should even be looking at them. It is what it is. Good question though. Hey man, I really appreciate it. Really appreciate this. The $5. Appreciate that. It means a lot to me. So I appreciate that. If you're still qualified at 6%, you're overpaying. Okay. So, all right. So his point is I'm just going to read through this, you guys. Home prices are still way too high. That's what my man is saying here. Correct me if I'm wrong, but home prices are still way too high. And that's why I'm warning you guys, don't follow me. Do not follow me. I'm a well-qualified buyer. I have a pretty good understanding of the market. That's why I'm saying, I'm personally going to try to purchase in Q1 of next year. But I'm going to make it a really good point, you guys, that not everyone follows me because I'm really worried that I almost don't even want to include that journey in my videos because I'm worried that people are going to stop listening to the data and they're just going to run out emotionally and buy a house. And that would be the opposite of what I'm trying to achieve on this channel. Let's see, what else do we got here, y'all? I was so real quick. I was so nervous, y'all, when I did this. I was like shaking. I was sweating. I had to like talk to Jeff M. Jeff M, if you're out there, I don't know where you are, but Jeff M was talking me down on my text message, like, Travis, it's okay. It's okay. I'm like, no, the feelings are real, Jeff. The feelings are real. All right, let's see what else we got here. No, I don't think arms are good. All right, let's see this one, you guys. And I'm sorry if I can't get to your questions, you guys. I'm gonna go for another 5 minutes, okay? I'm ready to give up earnest money I put against a new construction a few months ago in Dallas. Can the builder force me to close on the contract? What to do to avoid it? So here's the thing. Especially here in Texas. Okay, y'all understand this is my personal YouTube channel, and this is where I can get into trouble. I cannot give real estate advice, especially if you have a realtor. I cannot legally do that. I cannot legally give you guys financial advice. That's why I always have to say, I'm not a financial advisor. This is my personal YouTube channel, even though my bio is as a realtor, loan officer, and instructor, right? Husband, father, renter, right? The thing is, you're gonna, the legal, if this wasn't my personal channel, you got to talk to your realtor. But if this happened to me, my opinion is if it happened to me, I'm just talking to me, I'm going to figure out how much my earnest money deposit is. And if it's not too much, I'm going to cancel and I'm going to lock that crap up in escrow until they give me all of my money back, because they can't sell their houses that are trapped in escrow fighting for earnest money. So if the builder wants to play, I'm going to lock up their house. That's just me. Don't do that. I'm not telling y'all to do that. I'm just saying that's what I would do. That's what I would do. Okay. Because they want to just move on. Now that may work against you because they can't sell their houses anyways. So talk to a realtor, an attorney, and a broker, but that's what I would do. Man, I do not like new builders, you guys. I do not like them. So many things going on with new builds. I love these credit questions. Credit is actually my favorite thing to talk about, to be honest with you. Do medical bills affect your credit score? And an answer, yes, but okay, here's the thing. Bills don't affect your credit. Collections do affect your credit. So bills that you don't pay, whether it's on purpose or not. So the bills don't hurt you, but the collection hurts you. And the thing with medical is medical collections don't hurt your FICO score as much as normal collections. Plus certain loans like FHA loans allow you to disregard medical collections, right? Up to a certain cumulative total, right? So when I'm qualifying people for a loan, some of the requirements are if someone has an unpaid collection, I have to take like 1% or 2% or 3% of that balance and calculate a monthly payment to be used against DTI. I don't know if you guys caught that, but it's so if someone has an unpaid collection, I have to calculate sometimes a 5% payment on the unpaid balance of that collection to be used against their DTI. Crazy, except medical collections. So medical collections don't hurt you as much, okay? Does paying cash save you as much money? Oh my gosh, yes, because the loan cost, y'all, I mean, the closing costs on loans will be like $4 or $5 grand. So it will, but here's the thing, Eddie, my question to you is, brother, is can you make more money with the liquidity somewhere else, right? Like, do you want to pay all cash for a house when you know that the housing market is crashing and there's going to be deals right around the corner? Do you really want to use all your liquidity? Maybe you have a whole bunch of money, maybe you don't. But overall, yeah, it does. You're going to save some money, obviously. Let me get some more questions here, y'all. We'll go another few minutes here. Okay. Someone got coronavirus. I'm really sorry about that, brother. Another video, do I grab a friend? Yeah, I want to do the home inspection. Okay. Let me see this. Guys, I don't understand. Should you never go over 30% on credit card, even if you pay it at the end of the month? Okay. This is a good one. You guys, I love credit. Honestly, credit, of all the things that I know in real estate, I'd probably say credit is the thing that I probably know most about. Maybe not most, but maybe it's actually underwriting guidelines for loan qualifications, but I love credit, y'all. And let me carefully answer Kelsey's question. Guys, I understand you should never go over 30% of a credit card, even if you pay it off at the end of the month. Oh, I don't understand. Okay, so here's the thing. Pay attention. This is a loophole. This is something that I have used, and this is how this works. The question is at what point does the balance on your credit card report to the credit bureaus? I repeat, the question is, at what time does the balance, right? So how much did you go over utilization, 30% or not? At what time does that report to the bureaus? And I'm going to tell you this, it reports when it bills. So guess what? If it bills and then you pay it off, are the bureaus going to know? No, they're not, because the bureaus are only reported what's on the bill. So the trick is, fine, First of all, I don't think you should use your credit cards unless it's like my scenario where I have good credit and I put all of my main expenses on my credit card, and because I get $300 cash back at the end of the month, but I pay my credit card balance before it bills. So the credit bureaus always think that my balance is like $10 or $0. So in other words, if you have to charge your credit cards over 30% utilization ratio, pay it before it bills, or the bureaus will never find out per se. All right. Good question. Very good question. I hope you guys got that. That's something I teach a lot of people. Let's see what we got here. I really appreciate, all you guys. Love you, Sean and Wendy. Thank you so much. Appreciate all the love, you guys. I'm just a normal person. You guys have humbled me so much, man. I mean, sometimes I want to cry a little bit. Danny, Avery. So Avery, it was someone I had on the channel. I'm not sure. I'm trying to make it team Danny. The thing is, guys, and I want to talk about my career, if I may. I've got out of sales. I cannot do it. The type of salesperson that I've always been, I got to believe in it, and I got to have my heart in it. So I'm lacking on a team, you guys. I'm starting to, hone in on my team, trying to set it to team up so that when you guys reach out to me for stuff in Texas, that at least I have some people there that I trust that are available for you. But right now, it's just too ugly. It's too ugly. It's too yucky. And I don't want people to think that I'm saying the things that I'm saying to get leads. I don't want to sell houses, and I don't want to find you a house. I want you first to learn how it works. Okay. So, Danny, I don't know, brother. Pre-foreclosure. What do you think about? I don't like it. I don't like anything about foreclosures, y'all. I hate foreclosures for a lot of reasons, but mostly because it hurts people. Let's see here. I'm trying to find some more questions. Guys, scrolling down here. I think we're almost good. And I'm going to answer a couple more. Sorry. Let's talk about this. Okay. 2 more questions. Okay. I'm going to do this question about student loans, and then I'm going to do this question about assumable mortgages. Okay. These are 2 really good questions. And then I'm going to end this, you guys. These are really, really good here. I love it. Because you guys know, I've been a loan officer for 21 years. You guys don't even utilizing my loan officer skills, but do student loans count against your credit score / debt to income ratio? Now, if you're late on your student loan, it will count, right? The biggest impacting factor on credit reports is derogatory information. So if you're late, destroys your credit, right? But let's talk about student loans. So a lot of people aren't making payments to student loans. So the question is how does that affect your debt to income ratio when qualifying for a loan? And it does affect your debt to income ratio, depending on the type of loan and depending on the type of underwriting service, whether Freddie Mac or Fannie Mae or LP or DU. There's multiple, but depending on the type of loan, the underwriter is going to use anywhere from 1% to 2% of your school loan balance to be used as a payment to calculate against your debt to income ratio. So if someone has a $10,000 school loan, the underwriter may use 2%, calculate a $200 payment. That $200 payment goes against your debt to income ratio. Now, they keep making changes, to be honest with you, FHA predominantly, but Fannie Mae and Freddie Mac keep making changes regarding school loans. Now, I want to talk to you guys about assumable mortgage. Man, I got in an argument with someone I had on my channel, and I had to kick this guy off my channel. He was harassing. I felt like he was harassing me and my viewers. And then he was an investor. Just the ego on these guys. Here's the thing with investors. They're a dime a dozen. Anyone could make money in real estate. Even a high school dropout can. You guys, it's super easy. So when I see investors in some circle, I won't say it, but patting themselves on the back, it's just, I got better things to do with my time, right? And they're not even acknowledging the data. But let me explain assumable mortgage and what's really popular, subject to. Here's the thing with subject to. Let's talk about first subject to, because all of these people, subject to is so great. It might be. Here's my issue with subject to, okay? In essence, you're taking over a loan from a property owner. The problem with that is you're doing it without the permission generally of the existing lender. And the way that these lenders are set up, they have a due on sale or an acceleration clause in their loan paperwork. So if they see a change of title, they can have all of the money due at once. Now, here's the thing. Why would they want to do that if you're making payments? Well, maybe they don't want to lend on a 2% interest rate anymore. Maybe people are doing subject twos at a 2% rate, and the lender's like, nope, you owe us all the money or we're going to take the house, right? The thing that I'm saying is this: when it comes to a subject to, you're putting yourself at risk. Is it likely that they're going to use the acceleration clause or do it sell clause? It is unlikely. Okay. It is unlikely. Nevertheless, I don't want to start out my home journey, my home investing journey, always worried about, is the lender going to call this loan? And am I going to have to find hundreds of $1,000s to pay this loan off? That's the thing with subject to. Now, assumable mortgages take it a step further. Assumable mortgages are done with permission from the lender. The problem is unlike the past, in order to get an assumable mortgage, you have to qualify, right? You have to actually qualify. So the lender will take you as a buyer, potential buyer. And if you don't qualify for that loan, they're not going to give it to you. But not only that, another thing. So say you qualify for the assumable mortgage and you assume the mortgage. My other gripe is this: the seller is still liable. So if the buyer is late on their mortgage, if the lender has to foreclose, they can pass that liability on to the previous seller. The only way generally that doesn't happen is if the lender offers a full release of liability. Okay, so I hope I answered that. I hope I answered that question, you guys. I have Oscar. I appreciate you, man. Thank you for the donation, brother, and the support. Why are you buying? Okay. This is a good question. I'm trying to wrap this up, guys, but I mean, you guys got really good questions here. And then after I'm done with this video, I have to do more videos and editing. So I'm kind of taking my time. Why are you buying Q1 versus Q4? I'm well qualified too. What are your fears in waiting for Q4? I'm going to tell you guys this. Okay. I'm really glad that Oscar asked that, because this is the point I was trying to make earlier. Here's why I may purchase in Q1. I don't want to rent anymore, Oscar. I don't want to do it anymore. I've been renting, brother. I own a rental, right? Also a note on a house, but I don't want to rent anymore. I've been renting since I think July of 2021, and I don't want to do it anymore. I'm willing to be trapped a little bit in my house. The thing is, Oscar, I have till June, right? So I have till June, and I'm just ready to move on with my life. And I expect to be able to find a home that I love. I already found homes that I love on the market, but I expect to find a home that I love at a great deal. Okay. If I don't find a home that I love at a great deal, then I will push it out into a different quarter. But my goal in Q1 is to find a home that I love at a great deal, with the understanding that home value is going to go upside down. So if I purchase in Q1 of this year, I'm going to purchase with an expectation of a 15% loss. All right. Now, why wouldn't I wait till Q4? My lease, brother, I don't, it may make sense if I put, paper to paper, but there's also so my lease is expiring, right? But there's also a certain element of mental health, right? There's the element of mental health. I kind of want to move on with my life. It's very hard for me to work in my rental house right now. My kids, are everywhere. I can hear. I don't know if you guys can hear them. I heard them. They're actually right behind me. Well, not right behind me, but a little bit behind me. So, dude, I've been sacrificing so long. It's going to be hard. Oscar, I'm going to take you through that, man. But the reason is not because of pricing. Okay. The reason is not because of the best deal. Okay. I think that you're going to find a better deal in Q4 versus Q1. Okay. Do you understand? I think you're going to be able to find a better deal in Q4 versus Q1. But for me, I'm well positioned. And my goals are different, man. And I got to get out of this rental. I got to stop renting right now and kind of just move on. And that's why I'm saying, Oscar, I'm going to be very specific about that journey, because I don't think everyone or most people, I don't think they should follow me, right? Like, I have been beat up, chewed up, swallowed, and spit back out, and went through the flames. And now here I am. I already went through that. So I have different expectations. I just want you guys to be really careful. Okay. So here's a good question. Is there a good website app to track your credit? I'm going to tell you guys who I use as far as tracking my credit. Now, and I'm going to explain the cons on this, but I use Credit Karma. I have it on my phone right now. I mean, I could pull it up. I'm not going to. Oh, I want to, because my score on Credit Karma, here's the problem with Credit Karma. I use Credit Karma. It's free. It gives you 2 credit scores. I think it's Equifax and TransUnion. I think my score right now says 834. If I run my credit for mortgage, it's probably going to be like 780, 790. So Credit Karma is a good way to monitor your credit as far as the direction of your credit score. Like, is my credit score going up? Is it going down? Do I have inquiries? It's a really, really good tool. But what you have to understand about Credit Karma is They use a different algorithm to calculate your credit. Generally, when you pull your credit for cars or homes, your score is going to be much lower than what's on Credit Karma. So hope that answers that for you. Oh, Chase Freedom. So one of the guys also, what I want to do, excuse me, what I want to do, you guys, is I may start doing reviews on credit cards just because I went through bankruptcy, so I know how not to use credit cards. And then fast forward to today, I use one credit card. I use Chase Freedom, and I charge pretty much everything on my Chase Freedom, and then I pay it before it bills, and I get $200 to $400 cash back. So let me know if you guys want me to do some reviews on credit cards. Okay. I've thought about doing that. I just don't know if you guys are going to like that, but please comment in the live chat and let me know if you guys want me to review some of the better credit cards as far as cash back. Okay. If you guys could do that. And I think you've only been out for there for 1 year. So this is a good question. Let me just real quick. Qualify too. Oh, okay, I see Oscar answers. Let me just scroll to the bottom here, y'all. And I'm gonna get back to this. This is why I needed you, Jeff. I need you, brother. Oh my gosh, my boy right here. Give me $19. Thank you, man. Thank you, Kev. Let me, Trina. Are the expectations to considering your second job if you've only been there for 1 year? So let me explain what I believe that she's asking. First of all, I think people should get a second job. And I think you should make money. And I think you should save it. But when it comes to qualifying for a loan, okay, so back to underwriting guidelines. When it comes to qualifying for a loan, it's often difficult to use a second job as qualifying income. Generally, the rule is, depending on the type of loan, you have to have been working 2 jobs simultaneously for 2 years. If you're working 2 jobs simultaneously for 2 years, generally you can use both of those jobs for qualifying income. But and what Trina is saying here in her situation, again, I'm not an underwriter. This is just my personal channel, my opinion. You're going to want to get with a loan officer. Okay, Trina. But in my, from what I have done in my own situation, you can't use that as qualifying income until it's that 2-year mark. So sorry about that. Kev, thank you so much, brother. It means a lot to me. Thank you for the support, man. I mean, just that effort, it means a lot to me. Also, let me bring this up real quick. Johnny iFly, you guys, this is my boy right here. His job is to say the exact opposite of my point. So he's like agreeing with what we're saying, but he's taking it a step further in wit by saying the opposite thing. So if you guys see Johnny iFly, show him some love. I love that guy. Look at this next question. It's not you. Okay, Johnny, it's not you. I love you. I love your wit. It's not you, brother. Okay. And it was Deuster, but Deuster did me wrong with that Tony Soprano comment. So Deuster, you know what? Jeff, where you at? It was going to be Jeff too. My man, Mark. Love my man, Mark here. Good job, Travis. I'm going to start doing some more of those videos. Let me try to get, I'm so sorry, you guys. This video is going really long. I want you guys to watch this video. I didn't even put ads or anything, I don't think, on this video. I don't even know how that works. Sheldon knows. Okay, my favorite builders, 2 years for, oh, nice. This guy, Steve, good job, Steve. You could probably use that for both. Here's the thing. I don't have a favorite builder. Let me go into this, and this is the last question. Let me explain this, okay? As far as favorite builder, I don't have necessarily a favorite builder. There's certain models that I like. I like Weston. The thing is I don't know that I want to buy a new house. Okay. Oh my gosh, Deuster. Deuster. Unbelievable, man. Unbelievable. That totally threw me off, Deuster. You didn't have to do that, dude. You didn't have to do that. This is a really important point. Listen to what I'm saying. Not really a favorite builder per se. What I think, this is my strategy. So I want to buy a Weston home. I already know where it is, but I don't want to buy a new Weston home. I want to buy a used Weston home, because if I buy a used Weston home, more than likely I'm going to be able to purchase that resale property for 15% less. Okay. Because new construction is always, except back in the last crash and hopefully in the future, is always substantially more than resale homes. Okay. So, if you find a model that you like, try to find it on the resale market. In my opinion, a lot of those houses have a transferable warranty as well. Deuster, you're a maniac, brother. I really appreciate you. You didn't have to do that, man. That's very touching. We've got to get you on the show. I really want, you know what I almost did, guys? Let me just tell you one last thing. Thank you for hard work. Very informative. Thank you so much, brother. Now, this is what I was debating. Thank you so much as well, KOV. Let me tell you guys what I was debating and let me know. Thank you so much, you guys. You guys are very touching. Stop doing it. Stop doing that. You guys need to save your own money, please. No more doing that, please, guys. Save your money. And the more important thing is that you guys comment in the comment section, help other people out, sound the alarm, save your money, you guys. Very touching, you guys. Because I know how hard it is out there. So let me bring this. Let me tell you guys this, okay? And then you guys are making me so emotional right here. I mean, my life has been hard, man. I just really appreciate all this love. So let me say this, okay? And then I want you to comment right now. Let me ask this question. I debated, because I have a members only section on my channel, but understand my members only section right now is more of kind of like a support. It's kind of a support thing. And I don't really give you guys anything of value there. So don't just go there to my member section. Yet what I want to do in my member section is do like courses and stuff like free for my members. And it's only 99 cents. Like for, how credit works. But I also considered, like right before I do a live, I almost went to my members section of my channel and posted the link to StreamYard so that I can have some of my subscribers actually come on my live feed and ask me questions with video and audio. So let me know if you guys want me to do that. And if I do that, because I want to start doing a lot more lives, especially in the mornings like this. And then do my normal recording and do an evening drop. So I want to do like a morning live or like a credit card review and then an evening drop for housing market. But, let me know if you guys want. I think Deuster does. So, I am going to probably start doing, now it's scary because I don't know what you guys are going to say, especially, Deuster. But I think I want some of the members to come on these live streams and, ask questions. I really love it. I love doing interviews. You guys know that, all the people that I have on my channel. So I think I'm going to start doing that, guys. Again, don't just go joining, I'll mention that in some of my videos when I plan on doing that. I definitely want to, talk to my boy here, how to go to my member section. I don't see it. So if you go to my main channel, under the tabs, there's member tab. Or even if you go to a video on your phone, there's a join tab, but I'm telling you guys, you don't have to join. I don't have value for you yet, okay? I don't have value for you yet. When I'm making posts in my members section, it's just like, you guys, I'm in the cold, I have a camera, or I just caught a fish, or like, oh, I'm stressed. So it's just me whining and complaining mostly and occasionally doing polls. So understand that don't go to my member, don't do that yet, okay? But again, I really appreciate you guys' support. I do want to have you guys live with me so that I can talk to you. Let me kind of wrap it up, you guys. Okay, wait. One more thing. Okay, hold on, huh? Because this is one thing I wanted to talk about. Oh, Sheldon, good one. Let's see that necklace you're rocking. Johnny, why am I reading comments when I got one up here? My necklace. So this is my necklace. Not really why. Okay, it's my necklace right here. Okay. See, cool, right? I like it. It's my necklace. I'll leave it out for you. But anyways, that's my necklace. Weird flex, Johnny, but I love you. Scarface style. Okay, I'm so sorry. I want to make a point here. Okay, so where are all the realtors that tried pressuring me to purchase a year ago? Are they okay? Okay. Last point I want to try to make here. I got to stop reading the comments. You know how hard it is, you guys, to focus when I got all these comments like over here going on, right? Like what's this Scarface nonsense? But also one thing, and I'll get back to this. I'm going to start putting fawns in each of my videos. Okay. So there's going to be one time in my videos where the fawns comes up, something I just want to do differently. So the fawns is coming up on every single one of my videos. Look out for that. But I want to talk about realtors. They're freaking out. I mean, realtors right now are freaking the flip out because they're worried about their livelihood. They're worried about making money. And here's the problem with my industry, guys. It's impossible to change the entire culture of realtors. It's just so impossible. You can't do it because the way that realtors were essentially almost all of them are trained to conduct business. It's all cheerleading. It's almost entirely cheerleading. Some programs go more into like helping investors with data, calculation, rental ranges, and things like that. But you guys, the problem is the culture of realty is it's bad in times like this, especially in times like this where we need realtors to pivot to caution and not cheerleading. And they're not set up to be cautious. They're set up to be cheerleading. Now, I do want to make a point because I do have in my local market, I have realtors that I respect that watch my channel. Here's what I'm saying as far as realtors, y'all. I'm not trying to be disrespectful necessarily, but I mean, I really hate some realtors, you guys. I mean, it's just so bad. But the thing is you guys need to pivot to caution. That's my point. Okay. You guys need to pivot to caution and stop cheerleading. All right. And I know no one has a crystal ball, including you. You don't have a crystal ball either. So when it comes to someone's money, why would you be overly optimistic instead of cautious right now? That's just my opinion. So, it's a huge, huge problem. It is what it is. My man's renting as well. I'm renting as well. Moneymaker, sold place in April. Good job. That's it. Oh, you guys, one video I want to do. I just found an article, robots. An algorithm is managing rental properties and purchasing properties. A freaking robot, an algorithm. It's so bad right now. Okay. These companies are making investment trusts, REITs, real estate investment trusts, REITs. They're setting up an investment trust to where all these people can put money in here, and then a robot goes out to purchase properties, turns them into rentals, and manages the freaking rentals. So if I have let's say I have 25 grand, right? I can put it into one of these trusts, and guess what? I'm now part of the problem. Anyways, that's shocking to me. I need to stop, you guys. This is at an hour. No one's going to watch this over again because it's so long, but I really appreciate you guys. I'm going to go ahead and end the broadcast now. But before I do, you guys, don't be afraid, right? Don't think what I'm doing is trying to keep you locked in fear. I'm trying to sound the alarm to get your attention. I'm trying to get your attention because I want you to be prepared. I want you to be prepared because here's the thing. There's going to be a fine line between financial destruction and buying at the best time of our lives. There's a fine line, and I was on the wrong side of that line last time. Instead of me being allowed to invest from 2010 to 2012, I was forced on the sidelines because I lost everything. So understand there's a very fine line from financial ruin and opportunity. And right now, there's just too much dust in the air. The demand destruction from the Fed is very clear. They're very specific with what they're saying. So that's it, you guys. So I really, really love you. Really appreciate you. I think that's it. Blackstone, unbelievable. So, I mean, I just want to keep talking to you guys because I feel like, I don't talk to anyone as much. But Blackstone limited their withdrawals on the real estate investment trust. So pretty crazy stuff happening there. I mean, they're getting crushed, you guys. They are absolutely getting crushed. So I really appreciate you guys. I'm going to get out of here. I'm going to start working on my Redfin update video. You guys check that out. Once you see how, first of all, we only got one report left, but we are only a little over $2,000 away, according to Redfin, $2,000 away from a national year-over-year price decline. Unfortunately, you guys, Zillow is different data, CoreLogic is different data, Realtor.com is different data. Everyone has different data. I'm using Redfin. It is what it is. Other than that, guys, I really appreciate you. And if you're out there investing in real estate, I wish you luck and I hope you win.